The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Marc Fandetti. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Chuck Zodda and Marc Fandetti.
It's Chuck, Mark, and Tucker with you here, and as we kick things off today, top story is this morning's CPI report. The Consumer Price Index data for the month of May came in at 8:30 a.m. Eastern Time, and what we saw was the headline inflation rate moved up at a 0.5% clip for the month, annually moving up now at a 4.2% rate. Getting a little spicy there. First time back over 4% in a few years. It's never a number that you want to see when we talk about inflation in the United States. And on the core side, more muted as this strips out food and fuel, which are rising faster than the overall than other parts of the inflation picture. And so you've got core inflation moving up just 0.2% for the month, below expectations of 0.3%. Even though I did see a bunch of the Wall Street banks were in that 0.25 range. I think the average estimate was around 0.27. Core inflation, though, continuing to move up as well from 2.8% annually up to 2.9%. So as we sit here today, headlines at 4.2%, core is at 2.9%, and you're most likely going to see that headline number give a little bit back in the next month just because gas prices have cooled from the highs that we've seen. So you probably see that 4.2 if we're still here in the next week. The next week is when they actually go out and collect the gas price data for June. You probably see that 4.2 come back to somewhere around 4%. So, that would be a brief short-term improvement. But I think the place that I continue to land, Mark, is Fed funds rate right now is at 3.5 to 3.75%. Core inflation does seem to be on an upward trajectory that probably ends up somewhere in the 3.1 to 3.3 range by year end if we continue on this path. And so it's kind of tough for the Fed to be talking about cutting if core inflation is getting into that range with the Fed funds rate where it is. It's not necessarily like a 12-alarm fire that they need to be hiking rapidly right now, but the problem is that they are within sniffing distance of, hey, if oil prices do move, further up and that starts bleeding into core at a higher rate, then you've got a real problem where the Fed's next move has to be a hike, not a cut.
Cutting would be lunacy. It turns on its head every sensible monetary policy rule. That would be like a doctor telling you to eat more McDonald's in response to a high cholesterol reading.
Is that
barely wrong? Yes, I'm sorry, Chuck. I meant to talk to you about this. I'm barely exaggerating. It makes no sense. The only justification is that your political paymasters want you to do it, and this is why that Chair Warsh has a credibility problem. He's got to prove that he can buck the president. Inflation is at twice the Fed's goal. 4% is not inherently bad. We've talked about this.
Sure.
Fed could pick any inflation rate that it wanted and still stabilize unemployment. That's possible. But people don't seem to like mid-single-digit inflation, and that's why the Fed landed on 2. We're at twice that headline. Core is a little less, as you pointed out. There are other measures of the trend in inflation which aren't yet flashing red warning signs, but those get updated with a lag. The trend, by definition, moves slowly. So the Fed, I don't mean to sound too critical of Warsh, It's not his
Well,
fault.
well, he hasn't done anything yet,
No, he
so I'm not
doesn't.
going
But
to.
he said very stupid things though about cutting rates in advance of a productivity boon,
Sure.
which would normally merit higher rates, just like economically kind of illiterate, frankly. But anyway, let's suppose he gets his act together and he turns out to be a good, credible, independent Fed chair, then we should be okay. But if they're behind the curve, like they fall farther behind every day they don't do something, including right now, today, because real rates, nominal, the stated rate minus inflation, are coming down, and that will push the economy in excess of whatever its speed limit is, arguably.
When we talk about Warsh, again, we're now next Wednesday is Warsh's first Fed meeting as chair, and I can't remember if it was earlier this week or late last week, but I kind of laid out, hey, if I were Kevin Warsh, which I'm not, here would be my approach at my first couple of meetings, specifically like the first meeting next week. I would go in and I would say, and again, like both, privately in the meeting and then publicly in the press conference after, I would say, you know what? I do think that there might be, a productivity boom that's in the offing, but it's clear right now that inflation is a problem that we need to make sure doesn't get out of hand. As such, we're not hiking right now, but we'll be on the lookout for if we need to. And we'll maintain the Fed funds rate where it is. And if the inflation picture starts to show signs of worsening or signs that it's becoming more entrenched, we're going to be prepared to act if we need to. He doesn't need to actually do anything right now because Powell wasn't necessarily doing anything either. But I think just being able to build credibility within the committee such that he is saying the right things to them, and then at a point in the future can go to them and say, hey, now's the time where we need to cut if the data, suggests it's okay. But, I know that he came in saying, oh, we want to have, these family fights, when inflation's running 4.2%, that's not the time to have the fight at the Fed about how much inflation you want to allow.
Go back to Volcker. Volcker would say things like inflation's too high, and I'm paraphrasing here because some of these, I was going to say, we've got the tools to deal with it. That's a Powellism. It's an anachronism. Volcker didn't talk, nobody talked in those terms in those days. But he made it clear that the Fed's number one priority was to squash inflation.
What do you mean Volcker didn't talk in those terms?
No, I'm saying he wouldn't have used the phrase, we have the tools.
What would he say? I'm just curious, just because I wasn't alive during the Volcker days.
Yeah,
so
I was probably playing with Star Wars action figures. So he would have said things like, inflation is monetary. We control the money. They talked in terms of money supply, not interest rates in those days.
Sure.
They didn't have a Fed funds target. Fed funds followed changes in the money supply. But he was stern and he was resolute and he was clear. Laser focused on inflation. If Warsh adopts that sort of persona, and he was tutored a little bit by Volcker, so maybe he'll try to channel that. If the phrase productivity boon leaves his lips, he's failed already. Because it's telling you he's looking for a reason to cut rates. That is prospective. That is speculative. Nobody should be talking about a productivity boom that may or may not happen in 1, 3, or 5 years. That's crazy.
Yep.
Talk about inflation where it is today. It's too high. We've got the tools to deal with it. It's more or less what you said. But don't deviate from that would be my advice, because it's about forming our expectations right now. That's what all the jibber jabber is about. He's talking to you and me and anybody listening.
Sure.
We've got to believe that inflation is paramount for him.
So I think that ultimately this CPI report, the best thing that you can take from it, hey, it's not as bad as it could have been in that we knew the headline inflation number. You can probably, again, you can pull the show from, a month ago where I said, hey, based on, where gas prices are, you're probably heading towards like a 4.2 print on the headline number. The good news about this report, hey, the core number didn't show further seepage into it from higher gas prices at this point. Could it show more that comes over the course of the summer? Potentially. But, hey, you're not seeing, more seepage into core at this point. And I think that's about the only positive that you can take away from it. Whether that continues or not is an open question, but that's where we are at this particular point in time. The interesting thing to me is that the bond market is pretty much telling you the same thing. 10-year Treasury is pretty much flat today. It's moved 1 basis point to the downside. So the 10-year is not looking at this being like, yes, we can buy bonds now, everything's safe. The 10-year is saying, okay, like that's fine. We can't really get excited about it, but it's okay. The thing that you are seeing that is interesting to me is that when you look at TIPS, Treasury's Index for Inflation, you are seeing a healthier bid there, which obviously is indicative of, hey, okay, we're fine not selling our 10-year Treasuries, but we might want to own a little bit more, in the line of inflation protection if we want to be Treasury buyers right now. That to me is a little bit interesting, and I think we'll have to see where things go. But overall, CPI, again, continuing to heat up as we're now north of 4% inflation. This is the first time that headline CPI is north of 4% inflation. You've got to go back to, let me pull it here, May of 23. So it's been 3 years since the last time we had a 4 handle on this. It's not what you want to see. And we're just going to have to see where things go over the course of the summer with gas prices, because they are entirely in the driver's seat as it relates to this. That pun is intended, by the way. Let's take a quick break, and when we return, we'll talk a little bit about what is going on in oil markets.
Stay informed and prepared for market changes and breaking business news. The Financial Exchange is live every day on YouTube. Tune in, subscribe, and keep up to date on all of our show's content on a daily basis. This is the Financial Exchange Radio Network.
Hi, this is Mike Armstrong from the Armstrong Advisory Group. One missed retirement deadline could cost you thousands of dollars. Our new guide, Understanding RMDs, breaks down the rules for required minimum distributions, including when you have to take them and what can happen if you get it wrong. This isn't just about taking money out of an account. Your RMDs may affect your tax bracket, the taxation of your Social Security, and even whether you pay higher Medicare premiums. This guide also covers common mistakes people make, like forgetting about old retirement accounts and mishandling inherited IRAs. If you have money in a retirement account, this is information you need to know. Call us right now at 800-393-4001 to get your free copy of Understanding RMDs. That's 800-393-4001, or request the guide online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Without the right estate plan, your family could face unnecessary costs in the future. The right trust may help your loved ones avoid probate and better protect family assets. Get Cushing & Dolan's new guide called Demystifying the Top 8 Estate Planning Trusts by calling 866-848-5699. That's 866-848-5699, or request it online at LegalExchangeShow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
In a heartbeat, you could be the difference.
Marc collapsed from cardiac arrest.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive.
It took 30 minutes of chest compressions to finally feel a pulse.
Most of the time, it's because no one nearby performs CPR. But together, we can change that. Extraordinary things happen when people take action. A small step, a simple skill, a life-saving moment. HeartWalk brings communities together to create health and hope for every heartbeat. Every walker who joins HeartWalk, every dollar donated, means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local HeartWalk. Extraordinary starts with you. Join HeartWalk today. Find your local HeartWalk at heartwalk.org.
Let's talk LDL, aka bad cholesterol. The higher your LDL cholesterol, the higher your risk of a heart attack or stroke. Your health matters. Know your number. Talk to your doctor and get your cholesterol checked. And learn how to help lower your LDL bad cholesterol. Because your health is in your hands. Find out more at heart.org/LDL.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Get up-to-the-minute market updates with Wall Street Watch, weekdays at 10:30, only here on the Financial Exchange Radio Network.
Unless you've been living under a rock. What the heck was that?
That was The Rock.
Normally that'd be me.
Which, look, let's be honest, there aren't many people that live under rocks these days. You know, it's not a popular form of housing. But if you've been living under a rock, then you likely did miss the fact that the Philadelphia Semiconductor Index more than doubled from late March through early June. Subsequently, there's been all kinds of volatility there, including a 10% down day last Friday for that index, a massive swing yesterday where we saw like a 12% range, I think it was, on that index over the course of the day with just huge movement intraday. And even today, you've got like a 2% swing that we've seen in the first, 45 minutes or so of trading. So here's the thing. We talked about this a few times. Semiconductor stocks as a whole are not going to double every 2 months for the rest of your life. They're just not. There are a few certainties in this world. That is one of them, is that semiconductor stocks aren't going to double every, 2 months. It's great when they do. It can be exciting. But the other thing that we often talk about with semiconductor stocks is that, hey, once the party's over, it's really over there. They have these large drawdowns that are often 2 to 3x what we see in the drawdown of broader indices. So the Wall Street Journal has this piece here titled "The Corners of the Market Where Investors Are Riding Out Turbulence in Chip Stocks." And this does get at an idea that has been driving this market for the last year or so, which is investors are so hesitant to get out of the market because they believe, and the data from the market over the last year has influenced them to this effect, that President Trump is doing everything in his power to try to keep markets moving forward. No one wants to leave. And so rather than leaving the market if a portion of it starts struggling, you see investors rotating to other parts of it that they think are safer or might offer additional upside at this particular point in time. And what I will say, this piece is a classic. I don't even know that we have a term for what's the term that is there a term, Mark, for, hey, we see a bunch of numbers on a screen and then we use them to make up stories that may or may not actually be happening?
Journalism?
Oof.
Oh, zinger.
Okay. Let's go with that.
Is there
well, here's the thing. This is what CNBC and Bloomberg and all those guys do all the time.
They have to.
It's,
sure.
Hey, the market moved this way. Here's why it did.
Yeah.
And we talk an awful
BS,
lot. Like,
yeah, but sure.
There isn't normally like one proximate cause. And likewise, it's not like investors as a whole are sitting there going, hey, semiconductor stocks are going down. Let's all go this way. It's a bunch of individual decisions that get made. And then someone tries to say, oh, this is why investors did this. It's after the fact they're rationalizing it. And I think that when you look at, what's going on here, it's something where, hey, investors who are reticent to get out of the market entirely, well, in this environment right now where the U.S. economy remains pretty strong in nominal terms, yeah, there's an incentive to try to find a place that is still showing strong growth. So you've got, transportation stocks that have been doing well this year, but it's not because of anything relating to, anything in the Middle East or this and that or, semiconductors. It's, hey, there's a crackdown that's going on in basically drivers that are not unlicensed, but just don't have, all the full qualifications that they should in the trucking sector. And so trucking rates are exploding higher because there's a shortage of qualified drivers in order to, take stuff from point A to point B. So trucking companies are seeing their rates boom right now. And other things that you have, that are going on as well. You've got, all kinds of construction activity from data center build-outs, and so that's, feeding into some industrial areas and things like that. I don't think this is necessarily investors saying, oh, these semiconductor stocks are bad, we need to rotate somewhere else. These things have been occurring alongside each other, and now it's just, okay, the semiconductor boom can't go on going up 50% a month forever. The other stuff is not as extended, and so that's kind of continuing right now. I don't know, I don't think investors are just like, oh, semiconductors are down, let's do this. It's no, you just can't go up 100% every 2 months forever. That's the story to write, not, well, investors are trying to ride this out. I don't know, I think it's implying causation where it's just correlation, quite honestly.
Yeah, these are disparate decisions made by millions of individuals who aren't coordinating, aren't forming a consensus. It just looks like they are because all we see are the properties that emerge. It's like watching birds in flight. They're like a flock. There are lots of the behavioral people have done all kinds of work on this. So I see what you're getting at from earlier now. There might be a little bit of herding. There might be a little bit of, tech's looking really frothy. Let's look at the sectors that comprise value indices, which tend to be heavy in financials and relatively heavy in financials and healthcare, industrials, and, well, anything that the S&P is no longer heavy in by virtue of the fact that tech has become so distended.
Sorry.
Yeah, no. I was going to say there's not like some conspiracy or any kind of coordination. It's more like coincidence, not coordination, though the decisions of some people undoubtedly influence others.
Now, the other thing that I will say that I've said repeatedly over the last couple of years, every time something other than tech has tried to lead the way since 2023, we have fallen flat on our face shortly afterwards. It happened in the summer of 24. It happened in the spring of 25. It happened in the winter of 26. Every time, it's not like an instant thing. It builds over, a period of like 4 or 5 months. But every time we've started to see other parts of the market outperform tech, it hasn't gone well recently. I'm not saying that that's going to be the case here, but anytime I see tech start to lag in this market, I start to go, is everything else really strong enough to pull, that weight? Quick break here. Wall Street Watch and Ask Todd are next.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network. Without the right estate plan, your family could face unnecessary costs in the future. The right trust may help your loved ones avoid probate and better protect family assets. Get Cushing & Dolan's new guide called Demystifying the Top 8 Estate Planning Trusts by calling 866-848-5699. That's 866-848-5699 or request it online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. affiliated.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Hi, this is Mike Armstrong from the Armstrong Advisory Group. One missed retirement deadline could cost you thousands of dollars. Our new guide, Understanding RMDs, breaks down the rules for required minimum distributions, including when you have to take them and what can happen if you get it wrong. This isn't just about taking money out of an account. Your RMDs may affect your tax bracket, the taxation of your Social Security, and even whether you pay higher Medicare premiums. This guide also covers common mistakes people make, like forgetting about old retirement accounts and mishandling inherited IRAs. If you have money in a retirement account, this is information you need to know. Call us right now at 800-393-4001 to get your free copy of Understanding RMDs. That's 800-393-4001 or request the guide online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Our Senators Edward Markey and Elizabeth Warren and Representative Ayanna Pressley are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange Quick Tip of the Day. And today we're talking about your new guide, Todd, Demystifying the Top 7 Estate Planning Trusts. If there are younger families out there, should they consider having a trust in place, and what type?
Most people don't think about it when you're young, but if you're a young family, meaning you've got minor children, you might not have a ton of assets yet, but you want to make sure that what you do have is protected for your children. You could probably use a revocable trust. I don't think you need an irrevocable trust, but a revocable trust. You put your assets in. Again, they're going to avoid probate. Again, it may or may not be a big estate tax issue at the moment, but whatever you have, your children can't own, right? They are minors. So you don't necessarily want to leave your assets to a guardian and have the guardian deal with everything when you can design a trust to hold the assets and ensure how and when and where and why they get these assets. Just pick the right trustee, put the language you need in the trust to control it for those children, and the trust will accomplish that task. So just because you're young, folks, doesn't mean you shouldn't think about your estate planning. Sometimes it's not all about the money and the probate and the taxes, but more so about the family behind the estate plan.
The estate planning experts at Cushing & Dolan have been helping families like yours for more than 30 years, and they have written a brand new guide called Demystifying the Top 7 Estate Planning Trusts. Call right now for your free copy, 866-848-5699. That's 866-848-5699. Or you can request it from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Time now for Wall Street Watch, tracking the stocks, the data, and the headlines driving markets so far today, right here on the Financial Exchange Radio Network.
Markets trading slightly lower after yesterday's volatile ride, where investors are reacting to the Consumer Price Index, which climbed 0.5% in May, in line with estimates. With that, the annual rate of inflation now sits at 4.2%, the highest level in 3 years. Right now, the Dow is down about 0.5%, S&P 500 down only 2 points, NASDAQ actually just turned positive, up only 7 points, Russell 2000 is up about 1%, 10-year Treasury yield is flat at 4.52%, and oil jumping 1.5% higher, trading at $89 a barrel. Super Microcomputers tumbling 13% after the company announced plans to raise $7 billion in equity-related deals to help cover the costs of hardware component purchases. Meanwhile, shares of Cracker Barrel rallying 25% after the restaurant chain posted a surprise quarterly profit and lifted its outlook for the year, signaling its turnaround effort is showing progress. Elsewhere, RBC downgraded Nike to sector perform from outperform, saying Nike's turnaround is slower and narrower than they were anticipating. Nike stock is down about 0.5%. And more tech earnings are on the way this afternoon, where Oracle will report after the closing bell. I'm Tucker Silva, and that is Wall Street Watch.
This is Ask Todd on the Financial Exchange Radio Network. If you have an existing estate plan or are in the market for one, Todd Lutzke is here to answer your questions and help you plan for later life. Ask Todd is presented by Cushing & Dolan, serving Massachusetts and New England for more than 35 years, helping families with estate and tax planning, Medicaid planning, and probate law. Visit CushingDolan.com. Now, here's Todd Lutzke.
As promised, Mr. Todd Lutzke from Cushing & Dolan joins us live on air right now. And he's got one job, at least right now. The job is to answer your estate planning questions live on air. We got phone lines open at 888-205-2263. That is the number to call to ask Todd your estate planning questions live right now. We can usually get through 2, maybe 3 of these questions. So get calling early and often to make sure Todd has a chance to speak with you about your estate planning questions. That phone number is 888-205-2263. Again, it is 888-205-2263. And you get to talk to Todd right now about whatever is on your mind, estate planning related only, please. Again, 888-205-2263. Mr. Lutzke, how are you today?
I am doing really well.
Good. I'm great. Did you hear
that?
Did you hear about the British historian that found William Shakespeare's chewing pencil?
First of all, I didn't know that he had a chewing pencil, but
he did. Well, we didn't know either. But apparently, the pencil is so chewed they can't tell if it's to be or not to be.
A pencil.
They don't know.
Yeah,
they don't know.
That's great.
Yeah.
I hope they figure that out.
Me too. Todd, it's because 2B is a type of pencil. It's been a while since you've used a pencil, huh?
I don't use a 2B pencil.
Yeah, Todd always writes in pen.
In pen.
Yeah.
Which is what I have right here.
That's why. Okay, I'm glad that we did that. Todd, let's talk a little bit about irrevocable trusts. What are the biggest misconceptions you find people have about irrevocable trusts?
So I think the biggest misconception is, well, first of all, there's many kinds, right, of irrevocable trusts. And that's a real big confusion in and of itself, that the irrevocable trust, just because you hear the word irrevocable in it, doesn't always mean it's as irrevocable as you think it is. And it doesn't mean that you give up as much control as you might in your head think you do just because you hear the word irrevocable. Let's face it. If you don't know, you hear the word and you think, oh my gosh, I've given up a lot of control. Well, that's probably the 2 biggest misconceptions. One, when I set up an irrevocable, let's say, Medicaid irrevocable trust, right? That kind of trust is one in which you're going to keep a lot of control. The transfer of your assets to it is an incomplete gift for gift tax purposes. You don't have to worry about filing any gift tax returns. And when you pass away, it's going to be included in your estate for estate tax purposes. And it's a grantor trust, so for income tax purposes, you pay all the taxes at your own rate. So all these ideas that I pay more in taxes, I make a completed gift, the tax rates are higher at the trust level, not true. And probably you're going to be in control of your asset. Live in your house, sell your house, buy another house, move. A lot of control for you, and even the ability to change this irrevocable trust as to who the beneficiaries are. Versus, I'll just throw this one out there, a irrevocable life insurance trust, which many people have heard about, that they think can only own life insurance, but it can own other things. Well, that one's a little different. That is a completed gift. I have completely given away the asset, and it's not going to be included in my estate for estate tax purposes. It's not going to get a step up in basis on the assets when I die. But that's okay. The goal there was to reduce my estate for estate tax purposes. And you keep very little control over that asset. You might throw your spouse on as trustee if you want to set it up and you're the donor. And you might retain the right to remove and replace that trustee, but it would have to be with somebody that is not related or subordinate, where you could start out with a spouse, but you can't start playing around with the trustee after that and moving and replacing without it being someone not related or subordinate. The whole goal there is not to retain too much control as to cause the assets in that estate, in that trust, to be included in your estate, because that wasn't the goal. So lots of differences.
Talking with Todd Lutsky from the law firm of Cushing and Dolan. We still have room on the phone lines at 888-205-2263. That's the number to call to ask Todd your estate planning questions live on air right now. Again, 888-205-2263. We're going to take a quick break here, but when we return, we're going to get right to those questions with Todd. Again, 888-205-2263 is the number. Your questions with Todd are next.
Ask Todd with Todd Lutsky every Wednesday at 10:30, only here on the Financial Exchange Radio Network. Without the right estate plan, your family could face unnecessary costs in the future. The right trust may help your loved ones avoid probate and better protect family assets. Get Cushing & Dolan's new guide called Demystifying the Top 8 Estate Planning Trusts by calling 866-848-5699. That's 866-848-5699, or request it online at LegalExchangeShow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. Every mile can make a difference for a Massachusetts veteran. The DAV 5K Boston returns to Castle Island on Saturday, November 7th for a family-friendly day of community, remembrance, and support. Whether you run the 5K, join the 1 mile walk, or make a donation, your participation helps further the mission of the Disabled American Veterans Department of Massachusetts. Honor those who served. Sign up today at dav5k.boston. That's dav5k.boston.
Hi, this is Mike Armstrong from the Armstrong Advisory Group. One missed retirement deadline could cost you thousands of dollars. Our new guide, Understanding RMDs, breaks down the rules for required minimum distributions, including when you have to take them and what can happen if you get it wrong. This isn't just about taking money out of an account. Your RMDs may affect your tax bracket, the taxation of your Social Security, and even whether you pay higher Medicare premiums. This guide also covers common mistakes people make, like forgetting about old retirement accounts and mishandling inherited IRAs. If you have money in a retirement account, this is information you need to know. Call us right now at 800-393-4001 to get your free copy of Understanding RMDs. That's 800-393-4001, or request the guide online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
When a heart stops, the clock starts. You are the first responder until help arrives. In that moment, 4 minutes equals brain damage. 6 minutes equals too late in an emergency. The first responder is you. We need you. Will you be ready? Learn CPR. Visit heart.org/nation. That's heart.org/nation.
Is it a stroke? Even if you're not sure, act fast and call 911. Signs can include face drooping on one side, arm weakness, speech difficulty, or not making sense when talking. Time is critical. A stroke requires immediate medical care, which starts as soon as the ambulance arrives. So if you see any sign of stroke, act fast and call 911. Visit mass.gov/stroke, sponsored by the Massachusetts Department of Public Health.
You're listening to Ask Todd with Todd Lutzke on the Financial Exchange Radio Network.
All right, let's get right to those questions with Todd. First in the queue, we got Dan in Peabody. Dan, what's your question for Todd?
Hello. I have a revocable trust, and the trust is in my name.
Mm-hmm.
Does that give me any protection if I was to be sued?
So a revocable trust does not ever provide creditor protection, right? You're the donor, you're the trustee, correct?
Yes.
Which is, by the way, how it's supposed to be. So I don't want you to feel like you've done something wrong. I mean, are you married?
No. She passed away.
So you're a widow. And do you have children?
Yes, 3.
Was there planning done before your spouse passed away?
Yes, it was.
And there was a trust for her, or was and she had assets in the trust?
She had a separate trust because it was a second marriage.
Okay, good. And so those assets are now held in that trust, either for your benefit and then ultimately for maybe her kids when you pass, correct?
For my kids, not hers.
Or for your kids. Okay, so she didn't have children from a prior marriage?
She did, but she had a separate trust for her kids, and they got her house, and so we kept separate finances.
Right. Okay, so that's fine. So that's all night. The good news is that's sheltered for estate tax purposes. How old are you now?
I'm 76.
And would you say the size of your estate is more or less than the $2 million Massachusetts exemption?
More.
More than 4?
Right around there.
So the question becomes, of that, I'm sure there might be a house involved. The only thing I can tell you is that the direct answer to your question is no, it's not providing you any creditor protection, nor was it ever designed to do that. It's probably just simply avoiding probate for you at this point and providing for a bloodline plan to your family in the manner in which you want it to happen. By the way, all of which are good things to have, and it sounds like it's doing its job. I tell people that as you get older, you might want to review your plan. The only thing you might want to consider now is, do you want to change that to an irrevocable trust to provide to provide the creditor protection you're looking for, but also protecting the assets or some of them from the cost of long-term care. If that's the case, then you should probably seek out your lawyer and say, I want to review and maybe discuss that concern that you have about protecting assets from the nursing home, and they can explain to you how the irrevocable trust will work. So that's probably the best advice I can give at this point. But you know what, folks? In this trust, this guide we're giving away this month, there are not just his revocable trust, not just Dan's revocable trust that we just talked about, But there are 7 others, from irrevocable Medicaid trust, which is the one I just recommended for him, to irrevocable life insurance trusts and how they're very different, to nominee realty trusts, to sole benefit trusts if you happen to have a disabled child. One talks about pooled trusts for nursing home last-minute planning. Folks, there's a nominee realty trusts, which are not really trusts at all. But, folks, this guy doesn't just doesn't just list the documents. It really explains the purpose, the funding, the protections it provides, how the taxes are saved. Not just a big list. If you haven't done your planning, call, figure out which one is right for you, and kick off your estate planning. 866-848-5699 or legalexchangeshow.com. Again, 866-848-5699 or legalexchangeshow.com. And you can always go to Cushing Dolan PC, our Instagram page, for more information.
Todd, got another one in all set up for you here. Let's go to Dave in the car. Dave, you're on with Todd Lutzke.
Yes, good morning, gentlemen. I have a question regarding your trust, Todd. The irrevocable trust. Will I lose the stepped-up value of the real estate once the beneficiary comes into the money?
So
the value.
So let me ask you this question. I didn't hear that. Maybe you did say it. Is this a trust that I did for you, or is this a trust you're contemplating having done?
No, this is one that you did.
Okay, good, because that makes all the difference in the world, knowing that and able to answer the question. Because I'm not always sure how everybody else drafts their documents. So in your case, this trust is, and it was designed to protect the assets from the nursing home, right?
Correct.
Okay. So now I know that once you put the asset in the trust, for everybody listening, it was an incomplete gift for gift tax purposes, which is great. You didn't have to file any gift tax returns when you set it up. It's a grantor trust for income tax purposes, which means you're the owner for income tax purposes. And is it going to get the step up? The answer is yes, but let me explain why. Because many people, again, different kinds of irrevocable trusts have different results. So the purpose here was to transfer an asset to a trust like you did, Dave, but retain in the document, you'll see the language, I retain the right to the income from that transfer. So that paragraph, that retention of the right to income, does a few things for you. It allows you not only the right to live there the rest of your life, which of course you want, but it also causes the asset to be included in your estate when you give it away. So let me help people understand. There's a code section that says if you give something away during life and retain the right to the income, or retain the right to control the beneficial enjoyment of the property that you gave away, then the government says you did not effectively give that away. And therefore they keep like a string on it and they pull that back into your estate for estate tax purposes, not probate, but for estate tax purposes. Even though you don't own it, they treat it as if you own it, and therefore triggering the 1014A step up in basis. So long-winded answer, but sometimes people need to understand why you get it. You will get it not just on that property, on any property that's in there, and any stock portfolio that you might have put in there that might have grown over time. Now, I say this because I want to compare it now and contrast it to other irrevocable trusts. Another irrevocable trust you might have is, like we talked earlier, Chuck, the life insurance trust.
Sure.
Or a gifting trust. So for someone who might have larger assets that want to get assets out of their estate for estate tax purposes. And it's important we talk about this because there was a revenue ruling that came out in 2023 that confused everybody on this very issue. And I got so many calls saying, oh my gosh, my Medicaid trust isn't going to provide protection, isn't going to give me the step up in basis anymore. That is absolutely wrong. here's the reason. When you talk about an irrevocable grantor gifting trust, it is a grantor trust for income tax purposes, much like the one I just mentioned on the Medicaid side. But the difference is it's a completed gift. The Medicaid trust is not. When you give something to the irrevocable life insurance trust, you don't retain the right to the income. You don't retain the right to control the beneficial enjoyment. You're not going to be the trustee of that trust. And therefore, you're not violating this 2036 rule of giving something away and retaining that right, to control or enjoy it. So it prevents it from being included in your estate. So you save the estate tax by getting it out of your estate, but you trade off a carryover basis and you give up the step up in basis. It's just a trade-off, that's all. So there you go.
Mr. Lutsky, thank you so much for joining us. We appreciate your time.
Always a pleasure. Thank you.
This has been Ask Todd on the Financial Exchange Radio Network. Ask Todd with Todd Lutsky has been presented by Cushing & Dolan, serving Massachusetts and New England for more than 30 years, helping families with estate and tax planning, Medicaid planning, and probate law. Call 800-393-4001 or visit CushingDolan.com. The views expressed in this segment are solely those of Cushing & Dolan. Armstrong Advisory does not provide any legal or tax advice. Please consult with your legal or tax advisor on such matters. Cushing and Armstrong do not endorse each other and are not affiliated.
Still a bunch more to come as we head towards hour 2. We'll talk a little bit about oil prices. Why are they where they are right now? And what is the outlook for the rest of the summer? Also going to be touching on Social Security. We have a new update on when the Social Security Trust Fund is likely to be depleted. And I got to tell you, it's coming up fast. It's no longer the kind of thing where you're like, well, it's 15 years out. It's coming up fast. So we'll discuss that. We'll also discuss the state of the airline industry and a whole lot more. Stick around.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Let's talk LDL. AKA bad cholesterol. The higher your LDL cholesterol, the higher your risk of a heart attack or stroke. Your health matters. Know your number. Talk to your doctor and get your cholesterol checked. And learn how to help lower your LDL bad cholesterol. Because your health is in your hands. Find out more at heart.org/LDL.
Without the right estate plan, your family could face unnecessary costs in the future. The right trust may help your loved ones avoid probate and better protect family assets. Get Cushing & Dolan's new guide called Demystifying the Top 8 Estate Planning Trusts by calling 866-848-5699. That's 866-848-5699 or request it online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
In a heartbeat, you could be the difference.
Marc collapsed from cardiac arrest.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive.
It took 30 minutes of chest compressions to finally feel a pulse.
Most of the time, it's because no one nearby performs CPR. But together, we can change that. Extraordinary things happen when people take action. A small step, a simple skill, a life-saving moment. Heart Walk brings communities together to create health and hope for every heartbeat. Every walker who joins Heart Walk, every dollar donated, means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local Heart Walk. Extraordinary starts with you. Join Heart Walk today. Find your local Heart Walk at heartwalk.org.
This is the Money Matters Radio Network, WBNW 1120 AM and W275 CM FM, Concord, Boston. The Money Matters Radio Network.
Is it a stroke? Even if you're not sure, act fast and call 911. Signs can include face drooping on one side, arm weakness, speech difficulty, or not making sense when talking. Time is critical. A stroke requires immediate medical care, which starts as soon as the ambulance arrives. So if you see any sign of stroke, act fast and call 911. Visit mass.gov/stroke, sponsored by the Massachusetts Department of Public Health.
Our Senators Edward Markey and Elizabeth Warren and Representative Jake Auchincloss are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
A trust can do a lot more than simply pass assets to your family. Certain trusts may help keep your estate out of probate, protect assets for your children, and in some cases, even help reduce estate tax liability. Cushing & Dolan has created a new guide called Demystifying the Top Estate Planning Trusts. It breaks down some of the most commonly used trusts in estate planning, including trusts designed to help families plan for long-term care, protect beneficiaries with special needs, and help keep life insurance proceeds outside of a taxable estate. You'll also learn why simply having a trust isn't enough, because if it isn't properly funded, it may not accomplish the goals you expect. To get your free copy, call Cushing & Dolan today at 866-848-5699. That's 866-848-5699, or request the guide online at LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive. Most of the time, it's because no one nearby performs CPR. Every walker who joins Heart Walk means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local Heart Walk. Extraordinary starts with you. Find your local Heart Walk at heartwalk.org.
Hi, this is Chuck and Mike from the Armstrong Advisory Group. We've got a guide available this month on required minimum distributions. And, Mike, I want to talk about common mistakes that we see. Sure. Let's start first. People not understanding the difference between inherited and non-inherited IRAs.
Yeah, so if you've ever inherited an account that is retirement in nature, you've dealt with these complicated rules. And to make it more complicated, the rules have changed over the last several years. But suffice to say, unless you meet some very specific scenarios, in most cases, if you inherited an account from a non-spouse, then you're going to have 10 years to empty that account, pay any of the taxes that are due on it, and move along. But in addition, there are annual required minimum distributions, and it is very complicated.
What about a situation where someone tries to delay taking their RMD? What kind of problems can you run into there?
Well, one, if you delay your first year RMD, then you're going to have to take 2 in the same year, and that can really add to the tax burden. But more generally, if you just wait to deal with your future RMDs until you're 73 or 75 years old, you just have fewer options. It's going to bump up your income. income, you may end up paying higher taxes. You may end up paying higher Medicare premiums. Your Social Security could become more taxable. So it pays to plan early when it comes to RMDs.
Our guide this month is titled Understanding RMDs, and there are two different ways you can request it. The first, you can go to armstrongadvisory.com and request it there. The second, call 800-393-4001. That number again is 800-393-4001, or request it at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Marc Fandetti. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Chuck Zodda and Marc Fandetti.
It's Chuck, Mark, and Tucker with you here, and we've got, honestly, like, these are not healthy markets right now. I'm not saying that they're going to crash. What I am saying is they're just very unstable, and the rotation that's been keeping them afloat is getting more and more violent, and it's happening faster, and it's just a little gnarly right now. So what we've got, the S&P as of this very moment in time, is off 46 points. This despite it at one point today being down 50, but also being up 10. And so we're just seeing this huge intraday whipsaw, much like yesterday, where yesterday we opened, rose 80 points from the day before, then fell 230 points from there, then rose 150 points from there, and ended up closing down like 19. So there's just no stability in these markets right now. And this is happening as we are heading towards the SpaceX IPO on Friday. So S&P right now is off about 46 points. Actually, now it's off 52 just since I started talking. Dow's off about 150. NASDAQ Composite is off 244. Again, none of this to say that this is like some like crazy downturn that we're seeing or anything like that. The S&P right now at 73.34. Is off 3.8% from its high. It's not really notable. It's not worth writing home about. What I'm telling you is this is like the action that you're seeing within the market of individual names and sectors and things like that. It's not healthy what you're seeing and has the potential to worsen. Now, worsen could be to a 5% decline overall. It could be to a 10. I'm not saying that you're going to see like a bear market or anything. I'm just saying, hey, we're not really seeing the signs of stability that you like to see as things start to improve, which is decreasing volatility, more stability, things like that. That's not present right now. It's more expanding volatility and hitting more parts of the market. The 10-year Treasury, not really seeing any volatility. Despite a hot inflation report this morning that kicked the one-year CPI up to 4.2%, the 10-year is down 0.4 basis points, 0.4 of a basis point, to 4.524%, so almost no movement there. Dollar index not moving either, down 0.01% to 99.88. Gold is getting whacked today, though, as it has been for the last month or so, down $144 an ounce to 41.41. Crude oil getting bid up today, up 218 on West Texas Intermediate to 90.38. So a little bit of a bump there after a slide over the last month or so. And that is what is moving in markets. we're going to talk a little bit about crude oil. And before we get into the meat of it, which is today's EIA report on inventories and flows and things like that, we're going to talk a little bit about the U.S. crude oil ecosystem. Because I think it's important just to give a little context on this. So when we look at U.S. commercial inventories, which are what ultimately matter, thank you, Mark, I appreciate that. When we look at U.S. commercial inventories, there right now, just in terms of what the EIA is showing, there's about 426 million barrels of U.S. inventory. To which Americans, most of you listening, probably say, great, that means like there's tons of oil that's still available. And the answer is no, that's not really the case. And here's why. When you actually read through how the EIA calculates all of this, there are a few things you need to know. The first is they include pipeline line fill in that number. Now, we don't have numbers from 2026, but in 2024, there were around 140 million barrels of oil contained in pipelines in the United States. And that's great, except the only way to get stuff through a pipeline is to push more fluid through one end of it. And so you can't actually access all of that right now. You're not just going to drill a bunch of holes in the pipeline to get the oil out. That would be kind of stupid. Then you can't use the pipeline in the future. So right off the top, you've got 140 million barrels that is active line fill that is not inventory that you can actually use unless you pump more oil through it, which you're limited in terms of supply, of course. The second piece is every oil tank in the United States has a spigot, a tap that's attached to it in order to actually get oil in and out of it. That spigot is not at the bottom, and there's a really good reason for that. Mark, you like soup?
Love soup, yeah.
Stew?
Sure, why not?
Cereal?
Almost every day.
There you go. What happens when you get to the bottom of a bowl of any of those? Is it as good as what was at the top?
Oh. Is it as good?
When you're getting down to like the last little bites of it, like you're eating beef stew.
Yeah.
Is it the same as the first bites?
I haven't had it in a while. I think you want
Tucker,
me to say
when you're
no.
eating the first,
you want me to say no.
Tucker, what's the
tough question.
What's the best bite of soup?
The first.
First, second, third, because that's like all the meat's at the top, all the stuff is
Maybe
there.
the fourth, because the first is too hot.
But when you get down to the bottom, it's all the stuff that's just left over.
Yeah, it's just the mush.
It's the same with oil tanks. You get a bunch of sediment that collects there, a bunch of things that collect, and so through years of actual experience, oil companies said, hey, we're not going to put the spigot at the absolute bottom of the tank because then we're just going to get all the crap that comes out of it. They put it a little bit above the bottom. And so about 6 to 8% of all tank storage capacity is not available for pumping because it's crap, quite honestly, and you wouldn't be able to do anything with it anyways. That works out to about another 60 to 80 million barrels. So now we are at somewhere between 200 and 220 million barrels of inventory that's not usable. Finally, working inventory. Mark, you're familiar with this idea. If you're working in a factory, you don't just go to your supplier that morning and say, hey, here's what I need for today, because if they're out of it, well, you've already brought your people in, you got to pay them, you've already turned the lights on, you got all these expenses then, and you're not going to be able to produce anything. So you keep some working inventory in order to be able to keep your factory running. Oil refineries are the exact same way. And in the U.S., the estimates that we have from the EIA are that somewhere in the range of, again, we don't know this exactly, but somewhere in the ballpark of 150 to 170 million barrels is working inventory. And the reason why that's the case is in the U.S., we use through, our different, products and crude and everything, about 20 million barrels a day needs to go through the system. So you talk about this, and you're basically, again, oil refineries are pretty efficient now. They have to be. Like, they try to wring every bit of efficiency out of these. They've got like 7 to 8 days of inventory on hand because if you run out, then you're kind of in a pickle. Maybe you can compress that a little bit, but where we get to is that minimum operating inventory levels in the U.S. commercial crude system are somewhere between 350 and 390 million barrels, which means you need that in the system in order for it to actually work. It's kind of like, I'm trying to think of the comparison that I would make for if you guys have bank accounts, money.
Hopefully.
Yes, money, right?
Sure.
Yeah, you're filling it today.
You don't just take your bank account down to zero because then you get into things like overdrafts and debits and things like that's where you run into the gnarly problems. You have to maintain some working capital in there. It's the same with the U.S. oil system, and the estimates are somewhere between 350 and 390 million barrels are needed in order to maintain the system's operating integrity. We're now at 426 million barrels, and the latest draw was 7.2 million barrels, and we are seeing if you look at the last 4 weeks, about a 6.6 million barrel per week drawdown. Let's take a quick break. When we return, we'll talk about what happens if that drawdown continues, which hint it's going to for at least several weeks, and when we start running into problems based on the most recent data. Quick break, we'll discuss that, and we've got trivia next.
The Financial Exchange is live on SiriusXM's Business Radio Channel 132, weekdays from 11 to noon. Get the latest business and financial news from across the country and around the world, and keep up to date on how it might affect your wallet. That's the Financial Exchange, weekdays from 11 to noon on SiriusXM's Business Radio Channel 132. This is the Financial Exchange Radio Network.
This is Susan Powers from the Armstrong Advisory Group. When it comes to Social Security and Medicare, the decisions you make today can have a lasting impact on your retirement. There are key choices to consider, like when to claim, how spousal and survivor options work, and whether your Medicare coverage is aligned with your needs. Without a clear strategy, it's easy to overlook how taxes, income, and healthcare costs all connect. Join us for a complimentary educational seminar on Thursday, June 25th at 5 p.m. at the Marriott in Quincy. We'll help you understand your options and the decisions that come with them. That's Thursday, June 25th at 5 p.m. at the Marriott in Quincy. Reserve your seat today by calling 800-393-4001. That's 800-393-4001 or register online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. A trust can do a lot more than simply pass assets to your family. Certain trusts may help keep your estate out of probate, protect assets for your children, and in some cases, even help reduce estate tax liability. Cushing & Dolan has created a new guide called Demystifying the Top Estate Planning Trusts. It breaks down some of the most commonly used trusts in estate planning, including trusts designed to help families plan for long-term care, protect beneficiaries with special needs, and help keep life insurance proceeds outside of a taxable estate. You'll also learn why simply having a trust isn't enough, because if it isn't properly funded, it may not accomplish the goals you expect. To get your free copy, call Cushing & Dolan today at 866-848-5699. That's 866-848-5699, or request the guide online at legalexchangeshow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
In a heartbeat, you could be the difference.
Marc collapsed from cardiac arrest.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive.
It took 30 minutes of chest compressions to finally feel a pulse.
Most of the time, it's because no one nearby performs CPR. But together, we can change that. Extraordinary things happen when people take action. A small step, a simple skill, a life-saving moment. HeartWalk brings communities together to create health and hope for every heartbeat. Every walker who joins HeartWalk, every dollar donated, means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local HeartWalk. Extraordinary starts with you. Join HeartWalk today. Find your local HeartWalk at heartwalk.org.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
Here at the Massachusetts Department of Elementary and Secondary Education, we are committed to all students not only attending, but succeeding at school. Your presence is powerful. Share why you attend at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
Remember, you can watch the show live every day on our YouTube page. We've got market updates and breaking business news all morning long, plus a full archive of all our show's content. It's all there with the click of a button at youtube.com/The Financial Exchange Show.
Another day of World Cup trivia here on the Financial Exchange. Tomorrow afternoon, the 23rd World Cup tournament begins in Mexico City. Brazil is the only nation to have participated in every World Cup tournament. The U.S. was an early mainstay of the tournament, playing in 3 of the first 4 tournaments. So our trivia question today: how many World Cup tournaments has the U.S. men's team participated in? Once again, how many World Cup tournaments has the U.S. men's team participated in? Be the third person today to text us at 617-362-1385 with the correct answer, along with the keyword trivia. You'd win a Financial Exchange Show t-shirt. Once again, the third correct response to text us to the number 617-362-1385 with the correct answer, along with keyword trivia, will win that t-shirt. See complete contest rules at financialexchangeshow.com.
So we talked in the last segment about how the fact is that, again, we don't know exactly where it is, but the U.S. oil production ecosystem likely needs somewhere between 350 and 390 million barrels of crude oil in it as minimum operational inventory levels. Here's what we're seeing right now in terms of the drawdowns. In the last 6 weeks, drawdowns have averaged 5.5 million barrels a week. In the last 4, 6.6 million barrels a week, and in the last 2, 7.6 million barrels a week. So we've got an accelerating drawdown that is happening, which is expected because the rest of the world doesn't have any surplus oil, and so ours is basically filling the gap right now. So here's the deal. If we take the most conservative of those, the 6-week average, you're looking at the best case scenario being that we hit that 350 million barrel drawdown limit somewhere in the range of September 10th. That's what we're looking at in terms of best case. If 350 million barrels is the minimum we can draw to, and we're drawing at that 5.5 million barrels a week. If we use the 2-week average, 7.6 million barrels a week, the worst case scenario is that we hit that 390 million barrel limit, if that's what it is. Again, like, I don't know, like, no one really does. We've never actually gotten there because here's the thing. Normally, when you get down towards these levels, you say, like, basically what happens is price rises in order to not go to, tank bottoms pretty much. And with that, U.S. producers also say, okay, we can't get stocks from commercial inventories anymore. We can't get any more from U.S. producers. Great, let's import from somewhere else. Well, you can't import from somewhere else right now. Like, that valve is not available to you. So the worst case scenario that you run into is that we hit that 390 million barrel line on July 5th, day after 4th of July, which would not be like a great time to do so. I don't know like where we're actually going to be, but this is why I continue to say, look, it's great that oil prices have come down in the short term. I'm a little nervous about what the second half of the summer looks like. I'm hopeful that we'll all just be able to laugh this off and be like, okay, Chuck was wrong because of reasons X, Y, and Z. I'll take the L on it if that's the case. But like this isn't entirely a theoretical discourse that we're having. Like, we're seeing the drawdowns happening in U.S., not strategic reserves, commercial stockpiles. We're seeing them every week now. It's happening. The EIA is reporting on it every single week, and it's just simple subtraction. Like, this isn't multiplication. There's no exponents. It's just, okay, if you continue linearly at this pace, this is what happens. And so I'm a little nervous about what the second half of July looks like and onward. The other thing, even if Hormuz opens today, which I got to tell you, I don't think it's going to open today, even if the Strait of Hormuz opens and traffic returns to normal today, it takes a while for all this stuff to move. You still have all these ships that are heading to the U.S., to Louisiana and Texas to fill up and everything. It's not going to change this for the next 4 to 6 weeks anyways. So I think we're in a pretty dangerous spot here. I hope there's something I'm missing and I'm just being dumb. I don't usually root for that, but I kind of am in this case. But this is what I see, is things getting a little bit gnarly in terms of where pricing has to go to balance the system in the second half of the summer. So we'll see. I don't know. I'm hopeful that that's not what actually happens. And I hope I'm wrong, and it's just, Chuck, you missed this and that, and that solves the equation for us. That would be great. I'd be happy to take the L on this. And we're just going to have to see what the summer looks like, because thus far, the late spring into the early part of the summer is continuing, and I will take the W on this, exactly what we talked about would happen starting in late April. The last month and a half has been exactly what we talked about on this show that we thought would happen. And hopefully we're just wrong now into the future. I don't think we are, but we'll see. So there's that. Social Security now expects a shortfall earlier in late 2032. Your thoughts, Mark?
I don't have any original thoughts on this. Everybody knows the problem. The solutions have been fleshed out. I mean, what is there to say? I'm sorry. I don't mean to be defeatist or flip, but
no, we've talked you don't hear anyone campaigning on Social Security or anything. No one wants to talk about it because the only solutions no one actually likes. It's either raise taxes or cut benefits or some combination thereof. The other thing that you could do, remember, having babies today doesn't do anything to solve Social Security because they can't pay into the system at age 5, in 2032, 6 rather. So that doesn't solve it. The only other lever that you could pull is massively increase legal immigration of people aged 20 to 40 in order to get more payroll taxes being paid in from them. I don't really get the sense that's where we're going. So, this is kind of what it is. So, folks, if you are trying to figure out what your Social Security plan looks like in retirement, the good news, the Armstrong Advisory Group has a seminar that is happening on June 25th, just 2 weeks and 1 day out. It's at 5 p.m. at the Marriott in Quincy, Massachusetts, and it's the continuation of a set of seminars that the Armstrong Advisory Group has been putting on over the course of the spring and early summer to help inform you as to some of the considerations for Social Security and Medicare planning. Space is limited there. It is starting to fill up. Again, that date is Thursday, June 25th at 5 p.m. at the Marriott in Quincy, Massachusetts. You can sign up for it by going to armstrongadvisory.com/events. You can also call 800-393-4001. Again, that website is armstrongadvisory.com/events or call 800-393-4001. The
proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Equities remain broadly negative today, with the Dow off about 1%, S&P down 0.75%, NASDAQ down about 1% as well. So we got a modest sell-off continuing in equity markets at this point, and we'll continue to track and see how things move there. Quick break. When we come back, we get the trivia answer. We got Wall Street Watch, and we're talking airlines after this.
Bringing the latest financial news straight to your radio every day. It's the Financial Exchange on the Financial Exchange Radio Network.
Is it a stroke? Even if you're not sure, act fast and call 911. Signs can include face drooping on one side, arm weakness, speech difficulty, or not making sense when talking. Time is critical. A stroke requires immediate medical care, which starts as soon as the ambulance arrives. So if you see any sign of stroke, act fast and call 911. Visit mass.gov/stroke, sponsored by the Massachusetts Department of Public Health.
Our Senators Edward Markey and Elizabeth Warren and Representative James McGovern are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
Hi, this is Mike Armstrong from the Armstrong Advisory Group. As you age, the IRS stops asking you to save for retirement and starts insisting that you take money out. Those withdrawals are called required minimum distributions, and if you don't take enough, you could face a penalty of up to 25% of the amount you were supposed to withdraw. If you wait too long to take the first distribution, you could end up with 2 taxable withdrawals in the same year, which might push you into a higher tax bracket or increase your Medicare premiums. Our new guide, Understanding RMDs, covers this issue and others to help you prepare for this important retirement deadline. Get yours today by calling 800-393-4001. That number again is 800-393-4001, or you can request the guide from our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
In a heartbeat, you could be the difference.
Marc collapsed from cardiac arrest.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive.
It took 30 minutes of chest compressions to finally feel a pulse.
Most of the time, it's because no one nearby performs CPR. But together, we can change that. Extraordinary things happen when people take action. A small step, a simple skill, a life-saving moment. HeartWalk brings communities together to create health and hope for every heartbeat. Every walker who joins HeartWalk, every dollar donated, means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local HeartWalk. Extraordinary starts with you. Join HeartWalk today. Find your local HeartWalk at heartwalk.org.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today, we're talking about your new guide, Todd, Demystifying the Top 7 Estate Planning Trusts. Now, do you lose control if you transfer your assets to an irrevocable trust in order to protect them from long-term care expenses?
Well, you know, that's great when you mention that irrevocable trust, but limit it to the kind of trust where you're protecting it from the cost of long-term care. Because as the guide says, there's 7 different kinds of trusts that we're trying to demystify. And there's also many kinds of irrevocable trusts out there, not just one type. So many people think there's just one type. But this particular type, where you're trying to protect it from the cost of long-term care expenses, the answer is no. You do not lose control over your assets. There's a whole spectrum of control with irrevocable trusts. And this one, you keep about 95% control. Like, you can live in your house, you can sell your house, you can buy another house, you can invest your money, you can manage your money, you can collect the income. Even the tax liability of these trusts are designed to be at your own rate. In other words, they are grantor trusts. You don't even pay any higher income taxes when you have this irrevocable trust. So this kind of trust, folks, you keep control and you protect your assets from the cost of long-term care.
Call right now for your free copy of Cushing & Dolan's comprehensive guide titled Demystifying the Top 7 Estate Planning Trusts. It will help you determine what type of trust is right for you and your family. Call 866-848-5699. That's 866-848-5699. Or you can request it from LegalExchangeShow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated. Street Watch, tracking the stocks, the data, and the headlines driving markets so far today. Right here on the Financial Exchange Radio Network.
We got some more chop on Wall Street as investors react to the Consumer Price Index posted earlier this morning, which climbed 0.5% in May. With that, the annual rate of inflation now sits at 4.2%, the highest level in 3 years. Right now, the Dow is down over 1% or 565 points. S&P 500 down over 0.8%. NASDAQ down 1.2% or 308 points lower. Russell 2000 off about 0.4%. 10-year Treasury yield is flat at 4.52%, and oil up nearly 2% higher, trading right around $89 a barrel. Supermicro Computer stock is tumbling over 17% now after the company announced plans to raise $7 billion in equity-related deals to help cover the costs of hardware component purchases. Meanwhile, shares of Cracker Barrel rallying 28% after the restaurant chain posted a surprise quarterly profit and lifted its outlook for the year, signaling its turnaround effort is showing progress. Elsewhere, RBC downgraded Nike to sector perform from outperform, saying Nike's turnaround is slower and narrower than they were anticipating. Nike stock is down by about 0.5%, and more tech earnings on the way this afternoon, where Oracle will report their results after the closing bell. I'm Tucker Silva, and that is Wall Street Watch. And in the previous segment, we asked you the trivia question: how many World Cup tournaments has the U.S. men's team participated in? That would be 12. And Mike in West Yarmouth, Mass. is our winner today, taking home a Financial Exchange Show t-shirt. Congrats to Mike. We play trivia every day here on the Financial Exchange. See complete contest rules at financialexchangeshow.com.
All right, let's talk about this piece from the Financial Times. Quote, "You can't fly planes that are empty. Airlines draw up cuts for ugly winter." I'll quote here: "Airlines are preparing to slash their winter flight schedules, with the potential for planes to be grounded and tens of thousands of flights canceled if jet fuel prices remain elevated. Executives will decide within weeks how to steer their airlines through the final months of a tumultuous year that has led to soaring fuel prices after the Iran war upended global travel." So we've already seen airlines throughout Europe and Asia go through cuts of, on average, anywhere from like 2 to 5% of capacity for the second half of the summer. This is one of the things that is helping to keep, kind of a lid on, jet fuel prices and keep jet fuel from going crazy because, you're seeing these flight cuts. The question is that I think they're asking is, okay, if this continues, they see where the jet fuel market is going and they know which routes are profitable and which aren't, and you likely have more route cuts coming in order to prevent problems from happening. This is exactly what we talk about when we talk about demand destruction occurring.
Yeah, I guess it's the way it's supposed to work. You can't cut prices. Normally you would to fill airplanes, but it's not profitable to do so. You can't cover your costs, right?
Yep.
Because of rising fuel prices, and that leads to only one solution.
So, again, I think we'll have to see how this develops over the next couple of months here. I don't know exactly where it is going to go, but these are the things that are being talked about at this particular point in time within the airlines in order to try to make things work in the second half of the year and into the winter. Anthropic, the company behind the Claude series of AI models, they this morning released Claude Fable 5, which is based on the Mythos model that they have not released to the broad public because of cybersecurity concerns. And they've pretty much said, look, Fable 5 is just about the same as Mythos. We just built in a bunch of additional safety guardrails to keep people from using it in fashions that could be destructive. And if you try to go down that road, it's going to revert to older models in order to prevent you from doing so.
So what's the downside of the guardrails? Slower processing?
What do you mean?
Why wouldn't they just erect? Why is this even like a discussion?
What question are you asking, I guess?
why would they not impose guardrails on forbidden topics?
So for the actual Mythos release, it's not that they originally didn't impose guardrails. It's that the product was so strong that it like users could get around it basically. And this is, I guess, an additional level of protection that they've built in because the Mythos platform is still rolled out to a number of financial institutions, cybersecurity institutions, so that they can, work on their systems to harden them against potential attacks from, either directly from AI models or from, concepts that are developed by advanced AI models. And so this is not a toned-down version of it. It's just something where they've, I don't know how they do it, apparently been able to build better guardrails in so that you can't do some of the things that would be so destructive.
Good. Yeah, I don't without having insight on how hard it is to code that. I mean, obviously it makes the code less efficient.
Now,
so that's go ahead.
Yeah, the other thing that's interesting on this, they're rolling it out to paid users of Claude for a 2-week period. After that, if you want access to it, you're going to have to pay more. So this is where I will say, I do think what they're doing in terms of this rollout is absolutely something to try to juice things up for the IPO. I hold two thoughts in my head at the same time on this. Number one, I do think there was something to Mythos being, significantly more powerful and efficient and able to do more things than previous models. Basically, anyone who has come close to touching it has been like, yeah, there's a problem here. Like, we need to be really careful with this. But Anthropic's filed for an IPO that's probably going to happen somewhere in the July-August range. They also now they're rolling this out saying, okay, you can use this for 2 weeks. And the reason why they've said 2 weeks is that they can't commit to having enough compute power for it afterwards. But if you want to get people excited about the IPO, you roll something out for a couple weeks, get people hooked on it, then get them paying more for it. And it really juices things up heading into the IPO. So I think that might be a part of the actual rollout strategy on this. I still think that there's a reason why they're not releasing the Mythos platform to everyone. It's because, again, pretty much anyone who touches it is like, yep, there's something wild here. And I know a couple guys who have tried out the Fable platform this morning, and again, they're way more like I don't even know half the stuff they're talking about. But I asked them, like, what are you seeing on this? And they're like, yeah, this is a notable improvement from, previous versions in what they're using it for. So take that for what it's worth. Let's take a quick break here, and when we return, we'll do a little bit of stack roulette.
Get real-time financial insight as news breaks. The Financial Exchange is live on X. Watch the show and follow us for the most up-to-date business news you need to know. This is the Financial Exchange. A trust can do a lot more than simply pass assets to your family. Certain trusts may help keep your estate out of probate, protect assets for your children, and in some cases, even help reduce estate tax liability. Cushing & Dolan has created a new guide called Demystifying the Top Estate Planning Trusts. It breaks down some of the most commonly used trusts in estate planning, including trusts designed to help families plan for long-term care, protect beneficiaries with special needs, and help keep life insurance proceeds outside of a taxable estate. You'll also learn why simply having a trust isn't enough, because if it isn't properly funded, it may not accomplish the goals you expect. To get your free copy, call Cushing & Dolan today at 866-848-5699. That's 866-848-5699, or request the guide online at legalexchangeshow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, this is Mike Armstrong from the Armstrong Advisory Group. As you age, the IRS stops asking you to save for retirement and starts insisting that you take money out. Those withdrawals are called required minimum distributions, and if you don't take enough, you could face a penalty of up to 25% of the amount you were supposed to withdraw. If you wait too long to take the first distribution, you could end up with 2 taxable withdrawals in the same year, which might push you into a higher tax bracket or increase your Medicare premiums. Our new guide, Understanding RMDs, covers this issue and others to help you prepare for this important retirement deadline. Get yours today by calling 800-393-4001. That number again is 800-393-4001, or you can request the guide from our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, the grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
Our Senators Edward Markey and Elizabeth Warren and Representative Ayanna Pressley are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
From markets to money to business and financial news, watch the Financial Exchange every day on YouTube. Hit that subscribe button and keep up to date on the market news you need to know. This is the Financial Exchange.
The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts, registered today for this year's DAV 5K on Saturday, November 7th at Fort Independence on Castle Island. If you're not able to participate, you can still support our great American heroes by visiting dav5k.boston and making a donation today. Your participation helps provide vital services like free transportation to medical appointments and safe housing for single veterans and their families. Donate today at dav5k.boston. That's dav5k.boston.
Mark, what do you got for me for Stack Roulette?
Wall Street Journal reports that Fidelity will be introducing annuities into their target date funds that are increasingly adopted by employer plan sponsors in 401k plans. This is not a new thing, but the fact that the biggest of the record keepers, the folks that administer 401k plans, that being Fidelity, is going to be offering this to plan sponsors, apparently of all sizes, is, I think, it effectively allows smaller employers to feel comfortable with the idea. So again, this has been around for a long time. This notion that you could put your money in a sort of set it and forget it target date fund. It gets more conservative over time automatically. And then once you're in retirement, it gives you the option of buying an immediate annuity. So expect others like Vanguard and T. Rowe Price and other big, some of them are to an extent, expect them to follow suit and automatic pension-like income to become increasingly available. Probably a good development.
Tucker, what just happened in markets? Why did we just fall 0.5% in the last 3 minutes?
I am seeing that President Trump said we'll be attacking Iran hard.
Okay. Again,
He's speaking
I
right
just
now.
saw the S&P
Yeah.
fall 35 points as Mark was talking.
I'm
so I
seeing
was
that on
like,
Twitter right now.
oh, yep, there we go. There's the Chiron on the Bloomberg now. So, okay, sorry, I got distracted. Mark, walk me through the mechanics of what you're explaining there. I just want to make sure that I understand it.
Sure, we know how target date funds work. They're mixes of stocks and bonds.
No,
so-
but what I want to... You said that it would include annuities inside target date
Yeah,
funds.
so-
That doesn't mean that like Fidelity target date fund X is going to have an annuity as a portion of it, does it?
A portion of your bond money, your more conservative money, starting in your late 50s, will be allocated to what they call insurance contracts. They really just give the account owner the option to convert that portion of their plan to an immediate annuity at a future date.
Are there going to be non-annuity target date fund options from Fidelity?
Presumably, like they have an index suite today and an active suite today. Sure. Yeah. Oh, yeah. Plan sponsor won't be compelled to do this. They probably want to do their own due diligence, because if Fidelity turns out to have not done their homework, the sponsor, the employer, could be liable. So, but the fact that Fidelity is comfortable enough to put this on their large corporate plan platform suggests that they're confident that it would pass muster.
You know how earlier in the show we were saying that, a bunch of data, we see a bunch of numbers on the screen, and then a story comes out saying, oh, this is why you saw all of those numbers on the screen? This piece from Market Watch is classic as it relates to that. Sales of $1 million homes suggest inflation is spurring the wealthy to buy now. Okay, let's hold that thought for a minute. I'm going to quote from the piece. New data suggests rich buyers are fueling a rise in home sales, while lower-income Americans are finding it harder to get on the property ladder. Sales of existing homes accelerated to their fastest pace in a year in May, led by sales of homes priced over $1 million, according to the National Association of Realtors. The data could be a sign that the wave of inflation caused by tariffs and the Iran war is beginning to ripple through the economy, influencing the decisions of households in unpredictable ways. Sorry, I just threw my pen because this is ridiculous. There is no wealthy American who sits there and says, hey, you know what? Inflation's gone up in the last few months. I should buy a house. I'm sorry, but there is no one that does that. That's stupid. What I will say, and yes, I realize that I'm just offering the, another story, but I think it's a more believable one. Because look, none of us know what's happening, but this idea is dumb, quite honestly. Here's what I know, is that the stock market has gone nutty. There's a ton of private money from these upcoming IPOs that is going to be unleashed into markets. Everyone, you look at what's going on with tech stocks, and anyone who's anywhere close to tech has just a ton of money floating around right now. And so specifically, and I'll say this because if you look at the San Francisco real estate market right now, do you guys remember how everyone left San Francisco for dead a few years ago?
Yeah, yep.
You are now seeing $8 million listings going for $15 million because there's just so much tech money. The city's just awash in it again. And so this is why I can, I think, more convincingly say, no, this isn't because a bunch of wealthy people are sitting around going, hey, inflation's picking up. Do you think we should buy a house? No, that's stupid. No one does that. Okay. What people are absolutely doing is saying, hey, we've got a bunch of money because our tech stocks are up. Let's go buy a house with it. I'm not saying that inflation doesn't influence some of these decisions. I can tell you from a personal perspective, back in 2021 and 2022, I was looking around trying to find a new house. And one of the things I was going with was, again, I was trying to find it not because of inflation, but I saw where the inflation picture was going, and I said, I'm going to borrow as much money as cheaply as possible because inflation will allow me to deal with that more easily. But I wasn't buying the house because of inflation. I was buying the house because I needed a place to live, and I said, okay, let me do X, Y, or Z. So I don't think that rich buyers are sitting there going, hey, inflation just hit 4.2%. We need to buy a house. What I do think they're doing is they're saying, hey, our tech stocks are up. Let's use that money to buy a house. I think that is very plausible. What else you got for me, Mark? You're fascinated by this Chiron on the screen.
Yeah, I am. Okay, so stocks are down. Look, you talked about the volatility and lack of any kind of trend in markets. That's my interpretation. That's not what you said. And it's sort of understandable. I mean, we don't know. Will we be at war or not in 3 months, 6 months, or
a week,
even a short-term investors, whatever your short-term. Right. We don't know, consequently, whether or not oil will come back down and therefore inflation will come back down. We don't know whether the U.S. government will have to borrow $2 trillion next year or $2.5 trillion to make up for some of these war costs. There is an unusual. It's sort of trite to say, well, markets are on edge or there's a lot of uncertainty out there. That's always the case. That's why we have markets in the first place. If we had perfect certainty, we just have contracts, if that makes sense. The gyrations are understandable in light of the fluidity, shall we say, of policy. And I think I'm being kind there. You could call it lots of other less kind things.
I don't think this is the market saying there's too much uncertainty out there. I think it's... Again, I think that sometimes we make up stories about markets to be like, oh, like this is what's going on.
Journalists have to do that.
They have to. Guys, it's really simple. The market ran a ton in the last month.
Yeah, they know that.
And it's just like you can't do that forever. And I know that's like kind of a boring story to write, like, oh, markets went up because people really wanted to own stocks, and then markets went down because some people sold the gains. But sometimes that's all that's going on.
Yeah.
And... you know, again, you can have this rotation under the surface as people try to find a place to go. It's been getting more and more violent the last couple weeks, and it looks like that the mechanics just might be breaking under the surface a little bit. Does that mean that we, fall 20% from here? I don't know. This thing could be over tomorrow as far as any market volatility. Like, you never know until after the fact. Did anyone at the time think that March 31st was going to be the last day that markets went down, for like 3 weeks after? No, no one knew that. It ended up turning out to be. But I think the big thing is you've got a market that has some instability in it now, and you got to see some stability in it before we can, start to feel a little better about, this being over. Let's take a quick break for the rest of the day. Markets remain negative with the S&P off about 70 points, Dow's off 600, NASDAQ off about 345. We'll see you tomorrow.